All right, so you've been digging deep into cryptocurrency,
Oh, yeah.
specifically stablecoins.
Right.
Those
Yeah.
tokens that try to, hold a steady value.
Yeah, yeah.
The big ones, Tether, USDT, and USD coin or USDC.
Right, right.
They're popular in crypto trading because you can move quickly in and out of more volatile assets.
Yeah, they're designed to be pegged to something stable, usually the US dollar.
Yeah.
And you're looking into what happens if that peg breaks, right?
Yeah, exactly.
Like what happens to these stable coins if the dollar itself,
If the dollar tanks.
Yeah, if it takes a major hit.
Yeah, I've got research here exploring this exact scenario.
Wow.
What are the consequences for stable coins? How do they actually work?
Right.
And some historical parallels that kind of make me think that this is a really big deal.
It is a big deal
Yeah.
because, these stable coins are essentially built on the assumption that the dollar will always be strong.
Right.
So what happens if that assumption is wrong?
So let's start there. With how these fiat collateralized stablecoins actually work.
Yeah.
I mean, they're supposed to be backed one-to-one with the dollar.
Right.
But how does that actually play out?
So it all comes down to reserves.
Okay.
For every Tether or USD coin out there, the issuer claims to hold an equivalent amount of US dollars in reserve.
Okay.
So when you buy one of these stable coins, you're essentially buying a digital IOU for a US dollar.
Got it.
At least that's the promise.
So theoretically, they've got a massive pile of cash somewhere to back all those tokens.
That's the idea.
Wow.
These reserves are supposed to allow people to redeem their stablecoins for actual US dollars at any time.
Right.
That's how they maintain that 1.1 peg.
Okay.
But the key here is that this entire system relies on the US dollar itself holding its value.
So if the dollar goes down, those reserves aren't worth as much, and that 1.1 peg,
It goes out the window.
it's gone.
Yeah.
What could realistically cause a dollar collapse like that?
Okay, well, it's not an everyday occurrence, but history shows us that currencies can and do collapse.
Of course. Yeah.
Look at Argentina,
Right.
Zimbabwe, Venezuela.
Yeah.
They've all experienced, hyperinflation
Right.
and severe currency devaluation.
Yeah.
Now, the dollar is a different beast,
Uh-huh.
but the underlying mechanics are similar
Okay.
if confidence in the U.S. economy erodes.
Right.
If there's uncontrolled inflation,
Yeah.
or if there's a major global shift away from the dollar,
Right.
that could trigger a serious decline in its value.
Right.
And that would have a ripple effect on anything pegged to it,
Including stablecoins.
including stablecoins. Exactly.
So if the dollar starts to tank,
Yeah.
what happens to someone holding a bunch of Tether or USDC?
It wouldn't be pretty.
Okay.
Imagine you have 1,000 Tether
Okay.
and the dollar rapidly loses value.
Uh-huh.
Suddenly, your 1,000 Tether might only be worth, a fraction of its original purchasing power.
Right.
People would rush to redeem their stablecoins for actual dollars.
Mm.
But with the reserves depleted,
Mhm.
issuers might not be able to honor those redemptions.
Wow.
It could lead to a liquidity crisis for those stablecoin companies.
So that's chaos.
Yeah,
It wouldn't just impact the crypto world, right?
definitely not.
Okay.
The impact would ripple outwards.
Yeah.
Stablecoins are used for all kinds of transactions,
Right.
from buying and selling crypto to making payments in the real world.
Yeah.
Think about the role of Tether in providing liquidity to decentralized finance or DeFi.
Okay, so for listeners that might not be super familiar with DeFi,
Right.
can you just give us a quick...
Yeah, so DeFi is all about building financial services,
Oh.
lending, borrowing, trading on blockchain technology without relying on traditional banks.
Got it. So if Tether collapses, DeFi takes a hit too.
Most likely.
Wow.
Yeah, a stablecoin collapse could trigger a DeFi liquidity crisis,
Right.
making it difficult to, do anything on those platforms.
Right.
And it could also spark a broader crisis of confidence in the crypto ecosystem. Yeah. Imagine the impact on Bitcoin,
Right.
Ethereum, and all the other tokens.
It would be huge.
There would be huge volatility and uncertainty.
Yeah.
Some people might see Bitcoin with its decentralized nature as a safe haven asset in that kind of scenario.
Okay.
But it's hard to say for sure how it would all play out.
So these issuers,
Yeah.
Tether, Circle,
Right.
they must have some kind of contingency plan, right?
Yeah, I mean, they would be in a very difficult position.
Yeah.
They'd have to find creative solutions and fast.
Okay, so what could they do?
One strategy would be to shift their reserves into other assets that are less tied to the dollar.
So what kind of assets?
Well, they might consider diversifying into things like gold,
Okay.
other stronger currencies,
Uh-huh.
or even something called special drawing rights,
Okay.
or SDRs.
SDRs.
Yeah, they're a sort of global reserve asset created by the International Monetary Fund.
Right. So the IMF's attempt to create like a global safety net currency. Right. It's a basket of different currencies that's supposed to be more stable than any single one.
Exactly.
On it.
If the dollar is in trouble, SDRs might look a lot more appealing.
Right. Yeah.
It's like spreading your risk across a wider range of assets.
Okay.
Hoping that at least some of them hold their value.
Right. So gold, other currencies, SDRs.
Right.
What else is on the table?
They could consider repegging their stablecoin to something other than the US dollar.
Okay.
This could be a basket of currencies.
Yeah.
A commodity like gold.
Uh-huh.
Or even something more radical.
Okay.
An algorithmic stablecoin.
Algorithmic stablecoins.
Yeah.
Those try to maintain their peg through complex algorithms.
Yeah.
Smart contracts, like trying to program your way out of a financial crisis.
It is a pretty complex approach, and it's not without its risks.
Yeah.
But in a world where traditional currencies are failing,
Yeah.
maybe algorithms offer a more stable path.
It's a good question.
It's a fascinating question.
And it ties into this idea of whether a dollar collapse could actually be a good thing for crypto. I mean, it would shake things up for sure.
Yeah.
But maybe it would force the crypto world to become more innovative, more resilient.
Right.
Maybe that's the kind of push that's needed to create a truly decentralized and stable financial system.
That's a really thought-provoking idea.
Yeah.
A dollar collapse would undoubtedly be a major stress test for the crypto ecosystem.
Yeah.
You know, what's fascinating is that while it would cause a lot of pain and disruption in the short term, it could also accelerate the development of more robust and innovative solutions in the long term.
Okay, so speaking of history,
Yeah.
are there any other real-world examples that might give us some clues about how this whole stablecoin saga could unfold?
Absolutely.
Okay.
We can look beyond currency collapses to other historical instances where fixed exchange rates crumbled under pressure.
Right. Yeah.
Think about the UK leaving the European exchange rate mechanism in 1992.
That was a big deal, right?
It was a huge deal.
The pound basically crashed.
Exactly.
Right.
It's a good example of what can happen when a fixed exchange rate system comes under strain.
Right.
And in a way, the fiat collateralized stablecoins are like mini fixed exchange rate systems.
Yep.
They're pegged to the dollar.
Right.
And if that peg breaks, the consequences can be severe.
So history offers some valuable lessons.
It does.
And maybe some warnings, too.
Definitely.
Let's shift gears and talk about the future.
Okay.
What does all of this mean for the future of stablecoins?
Yeah.
Are they doomed, or is there hope?
It's definitely a wake-up call for the stablecoin industry. The current model, especially for dollar-pegged stablecoins, is vulnerable.
Right.
But it's also an opportunity to rethink and reinvent.
Okay, so not necessarily doomed, but definitely some work to be done.
Exactly.
Yeah.
And the solutions might be more radical than we imagine.
Right.
What if the real future of stability lies not in pegging to any single currency,
Right.
but in building systems that are truly decentralized and resilient?
That's a great question.
What do you think?
And it's one that I think we need to explore further.
Yeah.
But before we get too far ahead of ourselves, let's take a closer look at what's happening right now in the stablecoin world.
Okay. Sounds good.
We've been talking about these potential what-if scenarios, like what happens to stablecoins if the dollar collapses?
Right.
What options the issuers have?
Yeah.
But there's another piece of this puzzle I'm kind of curious about.
Okay.
What role does regulation play in all this?
Ah, yes, regulation.
Yeah.
A hot topic in the crypto world, and for good reason.
Right.
Some people say hands off, let the market figure things out on its own.
Right.
Others think clear rules are essential.
Yeah.
To protect investors and keep the whole system from imploding.
It sounds like things are pretty complicated right now in terms of how stablecoins are actually regulated.
It is a mixed bag. The regulatory landscape for stablecoins is still evolving.
Right.
And different countries are taking different approaches.
Okay.
The U.S. seems to be leaning towards stricter regulation.
Yeah.
There's a lot of concern among U.S. regulators about the potential risks stablecoins pose to the financial system.
So the U.S. is cracking down. What are they actually doing?
There have been congressional hearings,
Right.
reports and signals from regulators like the SEC and the CFTC.
Yeah.
They're looking at how to assert more oversight over stablecoin issuers.
Okay.
They want to make sure these companies are playing by the rules and that investors are protected.
What about other parts of the world? Is everyone else on the same page?
Not exactly.
Okay.
The European Union is working on a comprehensive framework for crypto assets, including stablecoins.
Okay.
Their proposed markets in crypto assets regulation, or MiCA, aims to create a unified set of rules across the EU.
So Europe is going for a more harmonized approach. What about those countries that are a bit more crypto-friendly? Are any of them taking a more hands-off approach?
There are definitely some jurisdictions taking a more cautious or even permissive stance.
Okay.
Some countries in Asia and Latin America, for example, are experimenting with different stablecoin models.
Interesting.
They're more open to letting the market develop with less regulatory intervention.
So it's a really diverse landscape out there.
It is.
No one-size-fits-all solution.
No.
Sounds like regulators around the world are facing some tough questions.
Yeah.
What are the key issues they're grappling with when it comes to stablecoins?
I'd say there are a few major areas of focus.
Okay.
Investor protection is a big one.
Okay.
Regulators want to make sure stablecoin holders are protected from fraud, scams, and market manipulation. Then there's the issue of financial stability. They're worried about the potential for stablecoins to disrupt the traditional financial system.
Like we were talking about earlier. Those ripple effects that could extend beyond the crypto world.
Exactly.
Yeah.
And we can't forget about the concerns around money laundering and terrorist financing.
Of course, yeah.
Regulators want to make sure stablecoins aren't being used for illegal activities.
So how do you balance all of that with the need to foster innovation?
Right.
I mean, too much regulation could stifle the whole crypto industry, right?
It's a delicate balancing act.
Yeah.
Regulators need to find a way to protect consumers and ensure financial stability, while also allowing room for innovation and growth. And that's where things get really tricky.
So regulation can be a double-edged sword.
It can.
It can provide certainty and stability, but it can also be a burden.
Precisely.
Yeah.
Well-designed regulations can legitimize the crypto industry in the eyes of the mainstream, attract more institutional investors, and create a level playing field.
Yeah.
But if they're not done right, regulations can stifle innovation and create unnecessary barriers to entry.
Sounds like there's a lot at stake here.
There is.
Yeah.
And I think the best case scenario is that regulators engage with industry experts and stakeholders to develop regulations that strike the right balance.
Yeah.
Regulations that protect consumers and the financial system without stifling the incredible potential of this technology.
Okay, so let's bring this back to our what-if scenario, a U.S. dollar collapse.
Okay.
We've talked about the impact on stablecoins.
Right.
But what about the role of regulators?
Yeah.
Could they do anything to mitigate the damage?
Yeah. That's a tough question.
Yeah.
In a situation where a major global currency is collapsing, it's hard to say how effective any regulatory measures would be.
So would it be every man for himself?
I think regulators would certainly try to intervene and take steps to stabilize the financial system.
Okay.
But their tools might be limited in a scenario like that.
What kind of things could they do?
They might coordinate with other countries to provide emergency liquidity or support to financial institutions.
Okay.
They might impose capital controls to try to prevent further erosion of confidence. But whether those measures would be enough to prevent a full-blown global financial crisis is anyone's guess.
And a dollar collapse would be a global event, right?
Absolutely.
I mean, not just a crypto problem.
Stablecoins would be just one piece of a much larger and more complex puzzle.
Yeah.
It would be a truly unprecedented event, and the consequences would be felt worldwide.
It's a sobering thought.
It is.
But I think it highlights the importance of having these conversations now, before something like that happens.
I completely agree.
Yeah.
We need to be thinking about these risks, exploring potential solutions, and working to build a more resilient financial system.
And that includes having a thoughtful discussion about the role of regulation.
Yes.
It's not about stifling innovation. It's about creating a framework that allows this technology to flourish while protecting people and the global financial system.
It's about finding that delicate balance between fostering innovation and mitigating risk.
Okay, so we've explored the current regulatory landscape, the challenges regulators are facing, and the potential role of regulation in a crisis. But what about the future? What does the future hold for stablecoins themselves? Are there new models emerging that might address some of the concerns we've been discussing?
That's a great question.
Yeah.
And it's one that a lot of brilliant minds are working on right now.
Okay.
The future of stablecoins is likely to be very different from what we see today.
Right.
And that's what we'll explore in the final part of our deep dive.
We've talked about some of the potential risks of stablecoins, especially those tied to the US dollar.
Right.
And we've kind of explored the complex world of regulation.
Uh-huh.
But now I'm curious about what the future holds for these stablecoins.
Yeah.
Are there new models emerging that could be less vulnerable, more resilient? What's next?
It's a really exciting time in the stablecoin space because there's so much innovation happening.
Okay.
People are recognizing the limitations of the current models and coming up with some really creative solutions.
So let's dive into some of these potential paths forward.
Okay.
You mentioned decentralized stablecoins earlier.
Right.
Can you remind me how those work?
Sure. Decentralized stablecoins are all about taking the power away from the central issuers and putting it into the hands of algorithms or a distributed network.
Okay.
Instead of relying on a company to hold reserves and maintain the peg, decentralized stablecoins use code and community governance to try to achieve stability.
So it's like Bitcoin in a way,
right? Exactly.
No single entity controlling it.
That's the idea.
Okay.
And that could make decentralized stablecoins more resistant to things like censorship or manipulation by governments or corporations.
Right.
There's no single point of failure.
That sounds promising.
Yeah.
But there must be some challenges too, right? I mean, coding a stablecoin that can weather all the storms of the financial world?
Right.
That can't be easy.
It's definitely not easy.
Yeah.
Designing those algorithms or governance mechanisms that can reliably maintain stability, that's a huge challenge.
Yeah.
And then there's the risk of unforeseen vulnerabilities or bugs in the code.
Right, yeah, of course.
Even the best programmers in the world make mistakes.
Yeah, and those mistakes could have big consequences in the financial world.
Absolutely.
So decentralized stablecoins are interesting, but it sounds like there's still a lot of work to be done.
There is.
What about those commodity-backed stablecoins we talked about earlier?
Right.
Are those a viable alternative?
They could be.
Okay.
Remember, commodity-backed stablecoins are tied to real-world assets like gold, oil, or other commodities. The idea is that those physical assets provide a more stable backing for the stablecoin than any fiat currency.
So there's like a digital version of the gold standard. Yeah. I remember reading about some stablecoins that are being developed with gold reserves or even baskets of commodities.
Exactly.
Yeah.
And the appeal is obvious, especially if you're worried about things like inflation or a currency collapse.
Right.
But there are challenges here too, of course.
Like making sure those commodity reserves actually exist.
Right.
And making sure they're being managed responsibly.
Those are big concerns.
Yep.
Auditing those reserves, ensuring transparency.
Right.
Those are crucial steps.
Yeah.
And there are logistical challenges too in terms of storing and managing those physical assets securely.
Okay, so we've got decentralized stablecoins, commodity-backed stablecoins. What about the current model? Those fiat collateralized stablecoins.
Right.
Is anyone working on making those more robust?
Definitely.
Oh.
There's a lot of research and development focused on creating more resilient versions of that model.
Okay.
One approach is to create multi-collateralized stablecoins that are backed by a basket of assets. Not just US dollars, but a mix of currencies, commodities, maybe even other cryptocurrencies.
So spreading the risk, diversifying the portfolio.
Right.
Yeah.
And another area of focus is developing better algorithms and risk management systems.
Okay.
It's about using technology to try to anticipate and respond to market volatility to build a more adaptable system.
So it sounds like there are a lot of smart people working on this problem.
There are.
That's good.
And what's fascinating is that it's not just about finding the perfect technological solution.
Right.
It's also about building trust, about creating systems that are transparent and accountable.
Because at the end of the day, people need to feel confident using these stablecoins.
Exactly.
They need to believe that their money is safe.
Right.
That the system is stable.
Exactly.
Yeah.
And I think that's what makes this whole space so interesting. It's not just about technology. It's about human behavior.
Right.
About psychology. About finding ways to create financial systems that people trust.
It's like we're witnessing the birth of a new financial system.
It is.
And the outcome is far from certain.
It is an incredible time to be watching this unfold.
Yeah, it really is.
And it raises so many fascinating questions.
It does. Like, what if the real future of stability isn't about pegging to anything at all?
Right.
What if it's about creating systems that are truly decentralized, adaptable, and resilient? Systems that can evolve and respond to whatever the world throws at them.
That's a powerful thought.
Yeah.
And it's one that I think will guide the evolution of stablecoins for years to come.
That's a lot to think about.
It is.
And it makes me wonder what role stablecoins will ultimately play in the future of finance.
Yeah.
Will they be a force for good, helping to create a more inclusive and equitable financial system? Or will they become just another tool for speculation and instability?
That's the question, isn't it?
It is.
And I think the answer lies in the choices we make.
Yeah.
The systems we build and the values we prioritize.
I guess we'll have to wait and see how it all unfolds.
It will.
But one thing's for sure, this is a story that's just getting started.
Absolutely.
And I, for one, am excited to see where it leads.
Me too.
And I hope you, our listener, are feeling just as intrigued by the world of stablecoins as we are.
I hope so.
This deep dive has barely scratched the surface.
Yeah.
And there's so much more to explore.
Absolutely.
If you're interested in learning more, there are tons of resources available online.
Definitely.
And of course, you can always reach out to us with your questions and thoughts.
Please do.
We love hearing from you.
We do.
And we'll be back soon with another deep dive into a fascinating topic.
Looking forward to it.
Until then, keep exploring, keep learning, and keep questioning.
Absolutely.